Good morning, everybody. Thank you all for coming. Thank you for being here at OLPI, as Con likes to say, OLPI. It hasn't kind of warmed on me yet, but I'm getting there. This is an effort, and today's events are an effort to sort of showcase and highlight the policy and regulation that we have seen in the past, that we're going to see as things progress. And OLPI is a great opportunity where we can find ways to work together. So everybody look at your partners. We're going to be working together a lot. Not just here today, but over the coming weeks and months, and that's what OLPI tries to do and is what we're going to continue to try and do. And so today we have a very, very exciting panel. It's going to be less like a panel, more like a conversation. We want to try and foster some dialogue and some communication amongst our panelists, and hopefully we'll have time to open it up to the floor. So let me start with introducing Matt Mulder, who is the Chief Counsel and Legislative Director for Congressman Patrick McHenry, who, if you didn't hear, just gave a speech, a riveting speech on the main floor, not as prestigious as this floor, but, you know, Matt said that he is much more interesting than his boss. Matt serves as the Chief Counsel, as I said. He advises Congressman McHenry on financial services and technology in both his roles as Vice Chairman of the House Financial Services Committee and Chief Deputy Whip for House Leadership. Previously, Matt served as Counsel for the Financial Services Committee, and prior to that, he served as Counsel for the Oversight and Government Reform Committee. Before working in public service, Matt worked as a senior associate at KPMG, specializing in forensic technology. And if I'm not mistaken, you went to Ohio State, right? No, Michigan. You went to Michigan, everybody. Come on up. That was from your boss, by the way. Brutal. We want to thank Matt and, of course, his boss for taking a leadership role. Next, not to be outdone, we have Lauren Oppenheimer, who is the Senior Economic Advisor for Senator Merkley. After arriving in D.C. in 2001, Lauren began her career in regulatory work at North American Securities Administrators Association, NASA, the other NASA, the Trade Association for State Security Regulators from North America. Lauren has worked on both sides of the Capitol, starting on the House side. She worked for former Representative Mel Watt from North Carolina and former Representative Paul Hodes from New Hampshire, both members of the House Financial Services Committee. She is now the Senior Economic Advisor for Senator Jeff Merkley from Oregon and advised him on issues relating to banking, budget, taxes, and trade. Prior to her work in the Senate, she launched the Capital Markets Initiative, CMI, at the think tank Third Way. CMI was started following the financial crisis, and its purpose was to explain to members of Congress, their staff, and policymakers the complex and opaque world of capital markets. She attended the University of Toronto. Unfortunately, I did not have a chance to see Senator Merkley, so I don't have any interesting tidbits about Lauren, but I know that she is an avid hockey fan and would not compete with Nat at golf. So come on up. And last, certainly not least, my great friend, Travis Johnson, who is currently a partner at the Eris Group. Travis has spent 15 years of leadership experience on Capitol Hill as a former Senate Deputy Chief of Staff and a senior staff member for the Secretary of HHS, Dr. Tom Price, working to develop strategies to pass significant bills into law in a difficult and challenging political environment. I don't know if I've ever heard a political environment that wasn't challenging, but we're going to talk about that in a moment. His background and knowledge of both Senate and House process and policy advances the most challenging issues of the day. Most recently, Travis was Deputy Chief of Staff to a senior member of the Senate Banking Committee and formed a reputation of bringing together bipartisan partnerships to get things accomplished on Capitol Hill. In addition to his top position in the Senate, Travis also served then Congressman Tom Price from Georgia, handling all issues related to his assignment on the House Financial Services Committee. He has served as the lead policy advisor for a top-tier gubernatorial campaign during the 2015-2016 cycle. He holds a degree in government from the College of William and Mary. Travis Johnson, thank you very, very much for agreeing to do this. So, as I said, this is hope to be an informal conversation. As a matter of fact, if any of you had been to our Marketplace Lending Summit together with Boston University and Rocket Loans, Cross River Bank hosted the first ever Marketplace Lending Summit in D.C. In September of last year. It was successful in that we had over 200 industry participants and everybody essentially involved in fintech was in the room to hear from three amazing keynotes. One was Controller Curry, and the two others were Congressman Patrick McHenry and Senator Jeff Merkley, who both did an amazing job and very, very well received. So I want to thank you both at the outset, number one, for guiding your bosses and doing what we think hopefully is in the best interest of the entire industry, and of course for continuing to keep the dialogue open. It is so important that we have these dialogues, that we continue these open lines of communication. That's how we're going to actually get things done, by finding ways to work together. Democrats, Republicans, executive, legislature, we're going to find ways to get things done. And so let's just open it up with some softballs, okay? Get things rolling. And again, the idea is conversation. Feel free to raise your hands, scream out. Just don't throw anything. House Majority Whip McHenry, and we'll start with you, Matt, introduced 3 bills last Congress to create a positive environment for fintech. What do you expect for this Congress? Is there other legislation? And most importantly, how is that going to work together with the new administration?
Thank you so much for having us. Thank you guys for being on this panel too with me. I guess, to start, we had 3 fintech bills last Congress that were introduced that we were really excited about. It's kind of small, medium, and large bills. Small one dealt with I hope will be a very bipartisan, practical problem that is the biggest headache for a lot of folks in this space, and that's dealing with a little form called the 4506T. And that little form helps inform not only student debt decisions, but credit cards, small business loans, mortgages, whether someone's going to get a loan or not. And amazingly downriver, or maybe not amazingly, the IRS takes that form and manually processes it, and it takes often 2 to 8 business days in order to get an answer on a basic true-false verification of income. So our bill is simple, just automates that process. Second bill, dealing with the Madden case, which I think a lot of you are familiar with. Again, hopefully it's a bipartisan bill. I will reintroduce this Congress that just codifies valid when made as a doctrine. It's essentially lifted directly from the pages of Obama's Solicitor General's brief in the case. So again, hopefully that's bipartisan. And then the third bill that we're really excited about is we're calling it permanent beta. I think some of the folks in the press call it the American sandbox, but basically it's twofold approach. The first is to require regulators to have an Office of Innovation, financial regulators to have an Office of Innovation internally. And then the second is to provide a legal way for more regulatory flexibility and also testing, while still complying with consumer protection, investor protection laws, still complying and addressing safety and soundness concerns, but at the same time saying, look, your service or product doesn't really fit neatly within this regulatory framework. Could there be an opportunity here where you could prove with the regulators under supervision, testing, that you're complying with the law, but doing so in an innovative way? And we're really excited about those 3 bits of legislation.
Thank you very, very much. And so let me ask you this. Do you see any, as we move into a new administration, do you see roadblocks? Or obviously with new members in your house, do you see things moving forward slowly, quickly? What do you think?
Yeah, so I think, generally speaking, it seems... Oh, I should have said this from the outset. My views here do not represent Representative McHenry, Financial Services Committee, House leadership, which he's a part of, my wife, my children. I'm alone on an island here. So with that out there. So I think, Trump administration is generally in favor of technology as it relates to actually helping small businesses and creating jobs and things like that. So from an administration standpoint, I'm optimistic that they're going to be supportive of these bits of legislation. But what matters more is Lauren here and her colleagues, Senate Democrats. Despite the headlines of Republican-controlled House, Republican-controlled Senate, a Republican-controlled presidency, humbly, my staffer viewpoint looking over at the Senate is there's fewer Republicans rather than more this Congress. So we have to do the heavy lifting of getting things bicameral, bipartisan, in order to get it to President Trump's desk.
And thank you. I think we all agree. Look, at the end of the day, we want to get something done. We can only do that by finding ways to work together. And so, Lauren, let me ask you this. Senator Brown and your boss, Senator Merkley, have asked the Fed, the OCC, and the FDIC, CFPB, what they're doing to ensure effective oversight of the development of fintech and marketplace lending. In your opinion, what could they be doing that they aren't already doing? And again, sort of, if you can, sort of shade this in light of the new administration.
Thanks, Phil. I just want to reiterate what Matt said about my views. They don't necessarily reflect Jeff Merkley's views, the senator from Oregon, or I think it's pretty safe to say they do reflect my husband's, but that's a different story. What do I think the regulators should be doing that they're not already doing? I think that's a good question. But I do want to highlight something the previous speaker said, Amias, who talked about what was going on inside of government. And I think it's probably clear to anyone in the audience who knows about my boss's interest in this issue that I'm probably part of the skepticism view. My boss thinks that there's a real potential for the work that most of you folks are doing to fill credit gaps, but there's lots of concern we have about consumer protections. So that said, I think one of the recommendations in Treasury's report to have better coordination between the different federal regulators is a really great start. I think that it would be well served to, that letter actually was just to the federal banking regulators, and I do think that there's a role for the SEC with folks like Lending Club issuing notes. They're very much involved. The SBA is clearly involved with a lot of these lenders, solely issuing loans to small businesses, and the FTC for the UDAP practices as well. I do think, I am sort of watching closely the CFPB's Project Catalyst. To my understanding, and you guys correct me if I'm wrong, they have not issued any no action letters yet for the work they're doing. My understanding, and again, correct me if I'm wrong, it is sort of similar. I think it's the closest thing we have to the sandbox right now.
Great.
Yeah, again, Travis Johnson with Aris Group, and I worked on Capitol Hill for 15 years prior to joining Aris Group last year, and I would say that I think that there is room, when you're able to identify issues jointly as, this is important, we want to ensure that, fintech is generally speaking exciting to folks because, you're removing some friction for the consumer to access credit or for small businesses to draw loans, which then reinvest in the economy, which, then you're getting more economic activity and job growth, which are on net winners across this political spectrum, left and right. So if you're able to identify those things that are good about an issue, I think you can look at them together and collectively see where you need to kind of work together to lower hurdles, to ensure adequate levels of consumer protection. And that's something that's going to take time to play out. With a new administration, you always get kind of a startup time period as they get their folks into positions. But that's why it's important that Congressman McHenry has been continuing his work that he started last Congress. Senator Merkley is clearly still very involved. And just because you're at different points of the political spectrum doesn't mean that you can't necessarily find ways, not necessarily just these two members, but all find a way to kind of work together, even in difficult environments. While there has been a lot of focus on regulatory actions over the last 12 months, I think it's inevitable that Congress gets more involved. And in order to do so, you need to kind of foster these political discussions and kind of bridge gaps into, finding common areas to work in, and kind of figuring out where the regulatory agencies are moving and making sure they're moving in the same direction is an easy kind of first step. Congressman McHenry's idea of kind of the sandbox, kind of an easy place for people to fintech folks to talk to the regulators is another kind of common sense first step. And you just kind of need to keep building these ideas, and eventually, you're going to have a handful of victories, either at the regulatory agency or, if necessary, on Capitol Hill, that kind of continues to foster innovation.
I think the biggest fear is, you turn on the news and something happens or some issue, and we see reactionary legislating to an issue. Let me ask you this, and Lauren, I'll throw this back to you. What worries you most about fintech, and what do you think is exciting about it, and how can we ensure that we continue these dialogues, that we don't have a reaction to any one thing, but that we're looking at this industry holistically?
I think I would pick up where Travis just left off, and I would say it's critical that Congress engage in more of an active way, and I know the House has definitely had hearings. The Senate hasn't had a hearing on fintech. Just to clarify, the Senate Banking Committee has not had a hearing on fintech since 2014, and it was my boss's then subcommittee on Bitcoin. But prior to that, it had been 2012 when the Banking Committee had a hearing on mobile payments. So I do think that it's really important that senators on the committee and off the committee have a better understanding of what this all means. I agree that this is a bipartisan issue. People on both sides of the aisle care about this. It impacts their constituents, both consumers and small businesses. What worries me? I think because everyone is touched by this, it's an online, and there have definitely been headlines about this industry, to be fair. I think you haven't seen a huge knee-jerk in terms of a legislative response. I think we have been trying to think, and be thoughtful about our response. Things that I think about definitely include anti-money laundering concerns. I definitely think about, and the Bank Secrecy Act. Obviously, Senator Merkley and Brown care very strongly about ensuring consumer protections are included in any type of legislative or regulatory approach going forward. And I just want to highlight one key point, and I'm sure everyone in the room knows this, but there is a distinction between consumer lending and small business lending. A lot of the loans that small businesses take tend to be under $100,000, and those loans don't have any federal oversight in terms of the same consumer protection laws that consumers would have.
Thank you. Matt, what worries you? What keeps you up at night, particularly about fintech?
What worries me the most is, and it's why I'm so excited to see so many people in the room today, it is so important to engage and get involved with policymakers in D.C. So thank you for your interest already in just going to this small panel, and I hope you go from this room and think about opportunities to go out to D.C. and tell your story. Stories beat spreadsheets in D.C. every time. And I don't think people in Washington understand your industry, and those that do are kind of scared of it, at least many of them are. And those that want to be supportive don't really know how. But if the carrot doesn't inspire you, I think the stick should as well, which is this is happening anyway. It's already too late. The regulators are moving on this. So it better be that you're there to inform their decision-making process, and we in Congress will do our jobs to do that as well. But this ramp-up has already occurred. And so it's now go time in terms of you all informing people who really don't understand this to start getting it. And so I think that's my, biggest fear, but also my biggest hope.
Yeah, and I guess I'd kind of pick up there and say, generally speaking, from my experience, Congress tends to do two things very, very well: nothing and overreact. So kind of picking up on Matt's point and Lauren's is that there's a constant need for you all to be active in reaching out to members of Capitol Hill to make sure they're educated, to make sure that they don't legislate by headline. these kind of dialogues today are a good start, but you have to make sure that you continue them and expand them constantly, so that as new issues pop up, they kind of see how the pieces fit together, so that they are engaged in their oversight role, talking to regulators, whether it be at a hearing or in meetings that they have, following up on hearings or working on different issues prior to rulemakings. Like, it's that kind of small ball that can be really effective in D.C. in terms of moving the needle at the regulatory agencies.
And I want to just add to that. I mean, this technology is new, but technology isn't new in the way it interacts with legislature. And usually governments get it wrong, and politicians get it particularly wrong. So one anecdote I love is, when cars were first invented, legislatures both in the United States as well as in the UK busied themselves with protecting the horses and how automobiles might scare horses on the road. I mean, there was crazy red flag laws where, actually people would have to pull over to the side of the road and make sure there wasn't any horses around a car within a certain proximity in order to then continue driving on the road, as opposed to thinking about how do we build an infrastructure for cars. And so let's not make that same mistake here with fintech.
I want to add something to that from, I guess, the other side of the perspective on this. I think when I look at what's going on in the fintech world, I think there is a lot of innovation. But again, back to what Amaya said, CDOs were a great innovation at the time, so we do need to make sure that there are guardrails around this. In particular, when I think about what some of you folks are doing, whether it's the extension of credit, dealing with payment processing, or blockchain, I'm sure there's a lot of different business models in here. But I worry that we're just looking at a new shiny delivery mechanism for something that's already happening and already regulated. So that's something that I'm just spending a lot of time sort of looking at.
No, and if I can, sort of as a public service announcement, I mean, you're sitting in a room that's sponsored by OLPI, and the idea is to educate. And when we started, when our CEO at Cross River Bank, Gilles Gade, and I started going to Washington, I mean, we would walk into offices and we could see how eyes would glaze over when we start talking about marketplace lending, or what is that, or do we have to focus on it? Whereas we go today, and people are excited to hear more about it and what our model is and how we're going to move our industry forward. And so let me shift this a bit to talk about, there's a point when executive powers are going, there's only so many executive orders one can sign before you have to sit down and work with the legislature, both Democrat and Republican, to actually get things done. I think, not today, but maybe tomorrow, we're going to be past that point of what can I do on my own and how do I find ways to work together. And so let me ask you, from your panel, what do you think Congress and the Trump administration can do to foster the acceleration of fintech development here in the United States?
I think Matt should start.
Smart.
I think Matt has a list of bills that he could read.
Yeah, but we've already talked about that. I think one other component to this that is really exciting. So, Congress, it's going to be gridlock as usual. Hopefully this space is one of those that we can avoid political games and making this a political football event. But one thing that is real is with the change in administration, personnel is policy at a lot of the different agencies. So I think another opportunity is getting the right people in key positions across the government so that they get your issues and they're supportive of responsible innovation.
So I work for Senator Jeff Merkley. He's a Democrat from Oregon. And I would say my perspective right now is that the Senate has a lot going on. We are in the midst of looking at repealing health care. There's interest in tax reform. There's interest in, we have to deal with the debt ceiling. We have to fund the government. All of that to say that there's a sort of a lot on the calendar. And while I think that this industry is only going to get bigger and I can't say for certain what I think the government outlook's going to look like, because we got our hands full right now.
Well, let me ask you this, and I apologize, Travis.
No.
Well,
Go ahead.
do you think now that Congress is maybe going to take a more active role when it comes to fintech because of the confusion, uncertainty, or so on? I mean, there's a lot of people in this room and in this conference who are concerned about the future. And do you think that this is an opportunity maybe for Congress, again, on both sides and both houses, to step up and take a
So
role?
I would just tell you what I've read that the chairman of the Senate Banking Committee has said, Chairman Crapo has said that the thing he's interested in tackling first and foremost is GSE reform, housing finance reform, and then after that we might get to watering down Dodd-Frank. So I think we could tackle this. I think it would be great if we could have a hearing or two. Like I said, I think Senate members of the Banking Committee it would be a great service to them if they got into the nitty-gritty of things like direct lenders versus, blockchain. And I think if you went up to a senator and was like, "What's blockchain?" I think they would give you a really nice answer, but I don't think they would.
So I would say I'm hopeful that you could develop some bipartisan consensus in this space.
Right now, right here?
I think we have two of the right people, although not, clearly we need to expand the approach, the number of people who are focused on this issue. I think Congressman McHenry has been a very vocal and leading advocate in this industry space. I think Senator Merkley has also been helpfully, I think, focused on the issue because whatever kind of solution that Congress or DC is going to come to in this space, it's inevitably going to have to be broadly not just bipartisan, but broadly bipartisan to kind of be able to cut through the levels of other things that's on Congress's agenda. Like Lauren named maybe half of what they're thinking about. She left out a Supreme Court nominee that's pending in the Senate. By the way, the president has to nominate 3 members of the Federal Reserve Board of Governors just in 2017 alone. There are multiple members of the SEC, multiple members of the FDIC, and that's even before you figure out what happens at the CFPB and OCC. So that's to say there's a lot, but as I said, I think that this is a space where you can develop, if there is shoe leather put into educating members, both on the substance of the issue and the importance of actually moving legislation and regulatory actions in the right direction. It's one that can cut through the noise, and you'd be surprised when members are presented with the opportunity to hold hands on a bipartisan way, the quickness with which they will do it sometimes. And sometimes they're even kind of political oddball couples, right? Like I've worked for very conservative members who partner with very progressive Democrats, and then I leave it to those members to argue about who's Felix and who's Oscar.
So let me ask you, and I think a lot of people are talking about this today. So with the new administration, what do you think the prospects of the national charter for fintech? Travis.
So I'll jump in for them, although I can tell they both had something they really wanted to say. So I think it's impossible to say at this point. I think to Matt's point, I think where personnel is policy, we haven't gotten to the granular level of detail of who the president wants to nominate at the FDIC, and we have a comptroller of the currency currently. So we know where he wants to go. The question is, how does that jive with the administration? Now, I think there is a powerful argument to make to that administration because what seems to move them the most in terms of my discussions with them is economic growth, job growth, and just in general consumers being able to access credit. I think these are all powerful motivators, and that will make the arguments that much stronger with the new administration. But as I said before, not just with the new administration, because those are arguments that cut across the partisan divide.
Well,
Yeah, and I'm just here to say, as the Democrat on the panel, I definitely think that Democrats like jobs too. So we would definitely want to find a way to ensure that things like disclosure, data protection, and fair lending standards are incorporated into whatever we see next.
Well, I'm a Democrat too, and I'm happy to have
No,
a job.
you're moderating.
So let me ask you this, and then I think this is sort of the perfect segue to the next question. So is there a particular easy area in fintech that would lend to bipartisan cooperation or working together? Do you think that there's a specific area where we can continue to develop or sort of work on regulatory actions that are more likely to be bipartisan? Someone's got to start. All right, that's a
No, I'm going to say something.
Okay.
I mentioned it before. I mean, I do think that money laundering is something that we're all concerned about. I think when the San Bernardino bombers? Well, anyway, won't get into the specific what happened, but I do know that the perpetrators in San Bernardino did get a loan from an online lender, and I think that raised some questions and some concerns.
I just wanted to say to everyone here, I mean, no issue is too granular for a bill idea. And so you should think about with your compliance teams, or let's be honest, you guys probably have one person on staff dealing with all of compliance. But just think about, what's bothering you? What's the headache test, like the 4506T idea? And then we can do our job to really promote that. Even if we start small with small wins, those have high likelihood of bipartisan success. So, I encourage you to, take stock in compliance issues, legal issues that just don't make any sense. Certainly, it's important to take on the big issues as well, but we can always start the ball rolling with just little things that are just don't make any sense.
So that was Matt's way of saying he's going to be sitting right here for the next 2 days. Feel free to bring all your problems and questions to him right here. And so let me just take this down and to the local level. With failure of federal action, and as a former member of the New York State Legislature myself, failure for the federal government to act, you're seeing a lot of states sort of stepping into various aspects of fintech. So how do you see the federal government sort of pushing back or letting the states do what they want to do? Lauren, start with you.
When my boss was the Speaker of the Oregon House, he passed the state's payday lending laws. State law is really important to him as someone who is very active in crafting it. I think we want to ensure that there are the laws that states have crafted and passed into law are protected in the sense that if there were to be an opportunity to preempt those laws, and that's why I've emphasized almost in every answer to all of your questions, consumer protection, just in case that wasn't clear. But I've heard a lot from the CSBS, the Conference of State Bank Supervisors. This is something that they're very interested in. My understanding is they're also looking at a type of NMLS for the fintech world. I think that could be really interesting. I think that's something that incorporates the state lending laws that also allow for ease of operation. That's something to look at.
Yeah, I mean, this might be just a worldview difference. I mean, we don't want a patchwork of different regulations for financial services, particularly in this space. I don't also love the idea of states teaming up with each other, and we have kind of what college football looks like today for you all in terms of getting your products to market. I mean, we live in a world right now where imagine you get on Google and before you start searching, it's like, welcome to Google, what state are you in? Here's the information that's provided. It's a crazy regulatory scheme that we're in right now. So we're big proponents of federal preemption and providing clarity so that when you all go to market, you know exactly what rules govern your products and services.
I mean, I think, again, one of the largest challenges is sort of misinformation and sometimes wrong information. I mean, New York State now, you have the State Department of Financial Services that has inserted financial services language into a budget bill. And so do we know what they're doing, why they're doing it, and how they're doing it? And this is just one of 50 states that are all trying to do their own thing. I mean, I know, and Travis, to throw you under the bus a bit, I know it's great in terms of sort of working in every state and having multiple legislatures to work on, but do you think that there's a way to sort of to bring people together in D.C. to make this work?
Well, there is, but it is always that balancing act, right, between states' rights on the one hand and the Commerce Clause of the Constitution on the other hand, right? Like you want to have a clear set of rules. You want to, on one hand, you don't want to use have a patchwork of rules, then become a barrier to entry that only the really, really, really big companies can afford to overcome. On the other hand, you want to be respectful of states' rights, and you need to figure out, and you can't really cherry pick, one over the other. Like in terms of like, I want to be a state, as a legislator, members are constantly trying to walk that balancing act of like being respectful for states' rights versus providing kind of regulatory certainty and an ability to compete across state lines. And so that is certainly the hard part of the whole proposition here.
And I also fear that this goes right to the core of financial inclusion. I mean, there is a hierarchy here of which states you go to first when you want to get a license, and it's no big secret. You probably want to go to California, Texas, or New York first. But like where my boss represents, Gastonia, North Carolina, the place where people need these products the most, they're often the last ones to get it. And that's kind of the sick irony of the American kind of regulatory scheme in financial services right now, is it really is those people that need these products the most are going to be the last to get it.
Can I just clarify something? And again, the people on the panel can correct me if I'm wrong, or anyone in the audience. But my understanding, as currently, is that for folks there's many different types of businesses in the fintech space, and for the most part, if you're associated with a bank, then oftentimes you can have a federal charter, and then if not, then you have a state charter. So this goes to I'll go back to my sort of shiny new delivery mechanism. If you have a direct to consumer and you're offering an extension of credit, then I think that there's a way we can incorporate states who are often closer to consumers than the federal government. And while it's not necessarily related, some of the work I've been doing in my office has to do with the CFPB, which does oversee a lot of the fintech products you folks are working on. And it in particular has to do with the idea that federal regulators were just as good at going after consumer enforcement actions. And I can tell you that I've looked at the numbers now, and from 2000 to 2008, the enforcement actions by the Fed, the OCC, the OTS, which then existed, the FTC, and I think that's everyone, they were abysmal. So that's why I go back to this idea that while perhaps we can have a federal role in regulating fintech, I want to always go back to sort of like, what problem are we trying to solve here?
So this was only the beginning of the conversation. We're very excited about the second annual Marketplace Lending Summit, which is going to take place in September in Washington, D.C., again sponsored by LPI and Rocket Loans and Cross River Bank. I want to thank the panelists for their time today, and more importantly for their bosses' tireless efforts in Washington. And of course, Travis, thank you so much. Thank you, everybody.